for the time being, let's get to a chat with the management of CG Power. Well, the last year was quite good, though the quarter four was a little bit of a mixed bag. Mr. Natarajan Srinivasan, the managing director and the chief executive officer, join in. Hi, Mr. Srinivasan. Good morning and thanks a lot for joining in. Well, congratulations on a good showing in FY24. But for FY25, what kind of a guidance can you give us? I think the last time we chatted, we were briefly discussing maybe a 20% growth or thereabouts. Do you think the consolidated revenue growth will be in that vicinity? And throw some light on both the segments. The industrial segment, are things better in quarter one in comparison to quarter four? And what about the power segment? Margins look spectacular out there. Is it sustainable?
So for the 24-25, I think we can definitely grow. If you want me to give a range, I can give 20 to 25%. So the order book as of 31st March 24 is actually higher by about 45%, 6,300 crores compared to 4,300 crores of last year. A large part of the orders is actually 3,700 crores in power systems, 1,500 crores in railways and rest in industrial. Industrial, actually, as you rightly said, in Q4, I think margins were a bit lower. Even industrial is primarily the motor business actually is experiencing a little bit of stress. And we believe that this will change post-elections. If that happens, then the growth can be much higher. So outlook, definitely, the power and railways are quite strong, and both we have good order book. And compared to margins, so in power, actually, every order will have a different margin. When you it's all by tender. Each transformer, each switchgear, when you get the order, each order will have a different margin. Anyway, this higher volumes and then good pricing, operating leverage as we pick up more volumes and then better absorption of fixed cost, all these contributed to the best ever margin. Company as a whole, I think both EBITDA margin, PBT margin is the highest. And then we crossed the 1,000 crore profit mark, which is the highest in the last 10, 12 years. I have not seen that figure. So outlook is strong, actually, I would say. Closing cash as of March is about 1,300 crores. Working capital can be efficient.
Right. Mr. Srinivasan, you want to put a number to that margin? Operating leverage will play out. Industrial segment will improve. Power segment is looking good. Consolidated margins, what should we work with? 15% or?
That is, I think, achievable. 15% definitely possible.
So around the FY24 level, FY24 you left off at 15.3, right, Mr. Srinivasan?
The PBT margin is 15.1 for FY23-24. See, it depends on if motor does well after the elections, then I think the margins can still go.
Has there been, to kick off this year, FY25, has the elections, etc., taken any a bite out of the business, tendering, etc., or not really? Nothing?
Not really. Not really.
Okay. And on the industrial side, you were saying that hopefully things will pick up. Anything, any more color you can add there?
So actually, even in 23-24, the industry actually grew. Industry grew by about 10% and CG grew by almost double the industry growth. And our margins actually in motors, from 34%, we have taken our market share, we have taken from 34% to 38%. So only thing, there has been some desperate selling leading to lesser margins. If that gets corrected, I think then there will be, obviously, there will be a little bit of a slowdown in projects during election time. Once that gets kicked off, I think the thing should be back.
Okay. Mr. Srinivasan, good morning. This is Sonia here. I have a couple of questions for you on the future plans. Your capex plans are also quite ambitious. You're doubling your power transformer capacity. I want to understand, when will these facilities start to contribute for you in your books, and what kind of ramp up can we expect?
So the transformer capacity from 17,000 to 34,000 MVA will get commissioned in Q4 of this year. I think when the increment, on account of the expansion, I think our turnover can go by about anything between 1,600 to 1,800 crores.
Okay, your turnover can go up by when, sir?
No, so the entire increase will come in next year or year after. Next year means in 25-26 or 26-27. It will ramp up will happen over a period of 18 months. I think by the following year, I think we'll get the entire benefit of the expansion. Motor also will complete the expansion partly this year and then partly next year. So that should also contribute at least another 25 to 35% next year. Switchgear will complete the expansion in the next financial year, not this financial year.
Okay, since we're talking about expansion, you're also making some investments for your OSAT facility, right? Alongside your expansion of capacities. I want to understand, will any of this put any pressure on your balance sheet? Because currently you don't have any debt on your books, but do you plan to take on any debt for these expansions, especially for the OSAT facility?
So OSAT, actually, we have to invest about 1,600 crores over a period of 5 years. And this year, in this financial year, 24-25, we have to invest about 300 crores, 350 crores over maybe 4 quarters. We have already contributed 90 crores in the first quarter. So we will do it probably 90 crores like that. As I mentioned, our closing cash is about 1,300 crores as of March. I have to spend another 400 crores for the ongoing capex. Then this 300 crores plus current year accruals will also always be there. Last year, we generated about close to about 800 crores of cash. So I don't see immediately any need to even take a debt. Maybe next year, after a couple of years, as and when it is required, then we can look at some debt if possible, if required.
Okay, all right. The final question, Mr. Srinivasan, before we let you go. The railways business, you're guiding for a whopping 40% growth in FY25. So things clearly looking up there. But I wanted to ask you about the EV motors business. Where are we in terms of development? Who are the potential customers? And say, in the next 3-4 years, what kind of revenues can come in from EV motors?
So I think 3-4 years without much on hand, I don't want to comment. There is a potential is quite huge, all that I can say. Right now, we are developing a couple of products for our own group company, TA Clean Mobility, and for another OEM. There are a lot of efforts we are putting here. And this year, actually, you will see a lot of efforts from our side on drives business, then EV motor, plus consumer electricals. All these three we want to make it a growth business. So we'll put a lot of efforts. But you give me some more time to come with some specific numbers.
Mr. Srinivasan, just one question. When you talk about that margin, I'm assuming that the price of copper is a key ingredient which goes into that mix, right? And generally, overall forecasts are that we'll perhaps have an up and up kind of an environment for metals, especially copper, because of its various uses, etc. Is it all pass through for you in the industrial side? On the industrial side?
So railways in the industrial railway part is actually pass through. There is no problem. Whatever railway business we get, it is a pass through. Motors, you have to follow some hedging strategy, and then if the cost goes beyond that, then you have to pass on to the market. In power also, we take in power-based transformer switchgears. Actually, we get some protection in terms of the PVC price variation clause.
Okay, all right. So there is some flexibility there. But do you foresee that as a bit of a problem area in terms of managing costs, or not? Or not really? Yeah.
No, this metal actually, what you said, copper and aluminium, we have to watch out. We are strictly watching it and then making appropriate steps for covering. But if the price goes beyond for some reason, I think there will be an issue.
Right.
Okay, Mr. Srinivasan, we leave it at that. We actually have many more questions on exports, etc. But I think we'll take that to another day. Hopefully, take some time from you later. Thanks a lot for joining in and speaking to us on CNBC TV 18. Well, that's CG Power.